Welcome back to the Alliance Group's YouTube channel. My name is Holly Tennant Billy, and I'm joined today by Brandon Frye of Guaranteed Rate Mortgage. In 2010, Brandon swapped his Seattle Seahawks football uniform for a suit and got into the mortgage lending business. He's been providing excellent service to home buyers ever since. Welcome, Brandon.
Thanks for having me.
It goes without saying, and the headlines are consistently covering mortgage interest rates, and that it's hard to escape from the speculation about what rates will and will not do in the coming months. We work in an industry where we understand that people buy and sell homes because of change and not necessarily because of interest rates. In a world where rates are often fluctuating, lenders have ways of helping assuage buyers' fears. Tell us, Brandon, about your lock and roll program.
So our lock and roll program allows us to lock a buyer's interest rate before they've ever found a home. You and I know that that's not the normal way things have been done historically. Usually, clients have waited until they're under contract to lock their rate, but in an unpredictable market like this, it can be nice to lock it before you have your house. I have a client who just ratified a contract last night. They locked their rate 2 months ago.
Okay.
Since they locked their rate, rates have gone up 1%. So
Wow.
This is a no-cost option. They locked their rate for free. You can lock it for 90 days. And the good thing is if rates come down, then they have the option to take the lower rate when that happens.
So if clients don't do lock and roll or some other kind of program, they worry about rates changing while they've rate locked. So they've paid for a rate lock, they worry about the rates changing. Tell us what happens in a scenario like that.
So that's, most programs that we're doing, they allow for a float down during the loan process. So you have one time after you've locked your rate where if rates get better, you can float down and take the current rates, which is very good, and it gives you a peace of mind that you're making a good decision and that you still have options in case things do sway while you're under contract.
It sounds like both of these are relatively low-risk options for a buyer.
Very low risk, and what I always tell my clients are, if rates go up, you will be mad that you didn't lock your rate, but if rates go down, we can still take advantage of it.
On a similar note, one of the seemingly trite but often true things we like to share with buyers is this notion of date the rate and marry the house you want to live in. And so that if interest rates drop, once you've already purchased the house, what are the options about refinancing once that purchase has been made and closed?
So one of the things we've been offering our clients in this high interest rate market is no fee refinances. So what happens on the day that our client closes on their new home, we set a rate alert so that once rates drop 0.5% lower than their current rate, they're eligible for this no fee refinance. So we're not going to charge them to take advantage of lower rates when that happens for 2 years. They have 2 years from their closing date.
Okay.
Yep.
Okay. That's
And what that means is we're not going to charge them any fees. We're going to help them during this tough market, help them get into that home, and then take care of them on the back end as well if rates come down.
That sounds great. And tell us about approximately, so if rates were to go down that 0.5%, can you give us an example of what it would be from a monthly perspective on average, knowing that this is...
Rough numbers, let's say you have a $600,000 mortgage. At 7%, your rate's going to be about $4,000 per month for principal and interest. If rates go down to 6.5% and they're eligible for this free refinance, now they could be saving $200 a month.
Wow.
So you go down to $3,800 per month in principal and interest.
Okay.
So at that time, we would pick up the phone and say, hey, rates have dropped, you're eligible for this free refinance. If you want to do it, we can. If you want to wait, maybe it goes down to 6%. Now you're saving $400 a month. It's really a comfort thing, but once we hit the 0.5%, they're eligible for that.
That's great. And another reason to buy the house if you find the right house now.
Exactly, especially if you're comfortable with the payment right now.
Having refinanced a few times on my own, I can tell you working with the lender that did your original mortgage can make the process extremely smooth and easy. You'll have to allow a little bit of time to allow an appraiser into the house, as well as a little bit of time to sign the closing docs. In sum total, you're talking about dedicating a handful of hours to a process in order to save meaningful dollars each month.
And depending on what program we're doing, sometimes we may not need an appraisal, or you may be eligible for a streamlined refinance. So it can limit some of that paperwork and some of that process.
So it's smooth.
It's very smooth. Yeah.
Staying on the topic of interest rates, one thing you've seen a lot of is homeowners wanting to keep their hands on their 2 to 3% interest rates of their primary residence. Are you seeing homeowners trying to leverage the equity in their current home to buy a new home?
Well, yeah, there's almost an emotional attachment to these rates because
Yep.
you've struck gold, you've hit the lottery, you have this extremely low payment on this asset that's appreciated so much over the last few years. So one thing I try to make sure all my clients at least consider is looking at keeping that property. If you're attached to it and you've done so well, it's helping you financially, maybe you keep that as a rental property if you're buying a new place, and it can help offset your new payment on your new house since rates are going to be a little higher. You don't have to necessarily sell that house and lose that great financial advantage you've got because of that.
That's great. We're always happy to run a rental analysis for our clients to hopefully help them generate passive income by letting their real estate work for them in a longer term manner. We know there are other ways to let that low 2 to 3% primary mortgage interest rate work for you, and ways that people can tap the equity in their home to make improvements or expand on their existing home. Talk to us a little bit about home equity lines of credit.
So these have become very popular recently. Obviously, the attachment we talked about to the 2 and 3% rates, you don't want to touch that. But I saw a recent infographic that said, 70% of homeowners have 50% or more equity in their home. So that's a ton of equity that you're sitting on. If you are going to do a renovation or if you're trying to consolidate debt, you're not going to touch that mortgage with that great rate. You're going to look at doing a home equity line. So we have a fully digital, very quick, very smooth home equity line that we offer that, I would say the average time from application to funds in our client's account is 5 to 10 days, which is awesome. And then also, if you're buying and you have all this equity in your home, you can tap into that equity for your next down payment. Or I have investors who have multiple investment properties, and now they want to take advantage of this market and being able to get a good deal on a property price-wise, and they're going to tap into some of those investment properties, that equity there as well.
That's just one of the many other ways you can make your home work for you. Brandon, this has been great. We appreciate you joining us today. We'll put your contact info down below in the comments. We would encourage any of our viewers to reach out and talk to Brandon Frye at Guaranteed Rate Mortgage if you have any additional mortgage-related questions. Thanks again for watching.